Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to take a look at Cadjpy and a potential swing trading opportunity that could be heading our way over the coming days or possibly into next week. Now, CAD is one of our strongest currencies currently and yen one of our weakest, and that's why we're seeing a nice uptrend form out of this market. That's why we're getting those higher highs, higher lows. So what we're looking for now, the market has broken into a new higher high, is for a new higher low to form. And where will it come in at and how do we trade it? Now, before we get into that, why was I looking at this market in the first place? Well, one of the reasons was the monthly time frame. I'm just going to go to the monthly time frame, and in one of our previous trading view posts we highlighted the fact that the market was back at these key monthly lows and we almost had a potential triple bottom forming, and we were expecting a bounce at this point. Now if we go down to the daily time frame, you can also see as well that we had a nice head and shoulders pattern form in there. Oh, I've typed it out wrong, let me just do that again. So we have the left shoulder, head, right shoulder, like so. So we have an inverse head and shoulders after the market has downtrended at a key monthly support level. So this is the area, that we were looking to get in at last week on the right shoulder, or the previous week, and that proved to be a really good trade. Now, what we're looking for this week is the potential for the market to continue that uptrend, and where to. So if we just go back up to that monthly time frame, where can we see this market moving up to? Now, there's a really nice resistance zone all the way up here. Let's just turn that to red so we know it's that resistance zone in there, which is potentially the previous monthly highs. Okay, so if we go back down to that daily time frame, we could see the market rally up into this area. Now, how are we going to trade it? There's a couple of different ways we can do it. So the first one we can look at is a pullback into our previous key highs in here, okay, and then look to trade on a lower time frame. So if the market pulls back into these previous structure highs just in here, then I'll look on a lower time frame, say the 4-hour time frame, for a potential long position in here. First target's back at the highs, second target's leave to run up into that 86, 84.50 area. A second way of looking at it is looking at the zone. Okay, so we have the zone already printed in here, but we'll just take away this and say if you're an end of day trader, what you'll be looking for is for price to come back within this structure high, and as long as price doesn't break this structure low, you want to be looking for a long opportunity. Now if I bring in the moving averages, so bring in the 20 and the 50, we've crossed over, or about to cross over nicely if the market does come and have another push out. But essentially what we're looking for here is the market to come back into this zone. Okay, so let's just remove those for a second. Back into this zone. Okay, and look for a long position. Now there is a key rule that I use with my Fibonacci retracement tool, and that is if the market closes below the 236 fib, then I won't look to action any long positions. So we've got a zone within there where there's a high probability that if price comes back into this key zone, okay, and forms bullish price action, we can look for a long opportunity in this area and we should see higher prices. Okay, so I hope you've enjoyed that video. If you're watching on YouTube, please like and subscribe to the channel. If you're watching on TradingView, give us a follow here, give us a like and comment below. Thanks for watching, and I'll speak to you soon.